Welcome back to Strictly Money. I'm here with Tim Cestnick of our family office. Tim, let's talk about refunds. Because, a lot of questions around, hey, what's the best use of the refund? What are your thoughts? What should people do if they get one?
So first of all, a lot of people like refunds because it's like a windfall, but don't forget you're actually lending money to CRA throughout the year and you're getting back your own money now without interest. So it's not a
Hmm.
great thing. So if you are entitled to claim deductions regularly that give rise to refunds like RSP deductions or whatever, you can actually apply to have any tax deducted at source reduced. So you're not paying as much throughout the year. So you're not going to get a big refund in April, and that might be actually better. But if you are getting a refund, a couple of things I would suggest you think about. First of all, um, because interest rates are going up so much now, paying down debt is maybe a number one priority for a lot of Canadians. And
Hmm.
it doesn't sound exciting, but taking your refund and paying down some debt is going to going to earn you a return. So if your debt is costing you, let's say 5%, then paying down $1 of that debt actually earns you a 5% after tax guaranteed rate of return on those dollars you're paying down. So paying down debt is one thing. I think also investing the money. So contributing it to an RESP, for example, if you're saving for a child's education, that comes back with grants from the government, or putting the money into a TFSA or an RSP is going to give more tax savings. So saving the money or investing the money is always a good idea. Of course, there's always spending the money. So you could spend it on things you've been hoping to buy. That a lot of people like that, or consider giving it away. If you want some more tax relief and you want to do some good at the same time, maybe look for some charities that you want to support and contribute even part of your refund to charity, and that's going to give you some tax credits back as well at the same
Okay,
time.
great. Tim, you touched on tax shelters, TFSA, RSP. Well, there's a new one now, as you know, the First Home Savings Account. It's officially available, officially I say, April 1st. How do you feel about it, first of all? Do you like it? And can you run through how it works?
Sure. This is a no-brainer. I think everyone who qualifies for the first home buyer's savings account should have one, and that's because it's much like an RSP and a TFSA combined. So you can contribute up to $8,000 a year to a maximum of 40,000 in your lifetime. You get a tax deduction for what you contribute to these plans, and you can pull the money out on a tax-free basis after you decide to, or at the time you decide to buy a home. So you want to use this money for a down payment on a home. Now, if you choose not to buy a home down the road, you can transfer the funds from this first home savings account into your RSP on a tax deferred basis. It's like extra RSP contribution room in that situation. So now, who qualifies? If you haven't owned a home this year or in the prior 4 years, then you're entitled to open one of these accounts up. And I would say it's a no-brainer. Everyone should be doing this if they qualify. Not every financial institution has them available today, but some do, and more and more will have them available as the year goes by. And certainly by the end of this year, they'll be available by virtually all institutions.
And Tim, can you just clarify? So I like the point that if you don't use it, there's nothing to lose, right? Because you can move it into your RSP, and you don't have to have the deduction room in your RSP. Is that correct?
That's exactly right.
Okay.
This is extra RSP contribution room
Mm.
if you don't end up using it to buy a home.
Okay. The only thing is, I guess, once it's in an RSP, once you pull it out, it's going to be taxable.
It will be. So it'll be like additional RSP assets that you put into your RSP. That's all it's like. But that's not a bad thing. So I think, even if you're not sure you're going to buy a home, I'd still use one of these plans if you can find some money to put into one.
Yeah. I know there's a lot of debate as to whether this is really going to help with home affordability because, 40,000 is not a lot. You got, it takes 5 years to sort of save up for that. But if I'm right, you can use this with a home buyer's plan, which is your RSP as well, correct? Because there was also
Yeah,
debate whether you could do this or not.
yeah. When they first came out with the rules around the first home savings account, you could not combine it with with the home buyer's plan. Now you can. The home buyer's plan just allows you to take money out of your RSP for a down payment on a home. It's tax free when you pull it out. You do have to repay it over 15 years. So that's the only, if you want to call it a drawback, it's an obligation you have. And if you don't pay it back, you pay tax on it. But that's still not a bad thing. When you combine the money in a first home savings account with a home buyer's plan, you may be able to, over the course of 3, 4, 5 years, maybe build up enough to actually have a meaningful down payment.
Yeah, and you have the TFSA, and I guess if you're a couple, that means double the amount if you happen to be
That's right. That's
with someone.
exactly right. So, yeah, and keep in mind if you are, for example, a spouse, you have a spouse, you can both open up these accounts if you have not owned a home. If neither of you have owned a home in the last 4 years.
Okay, we're going to take another break. We'll be back in 2.